Right then, good afternoon everyone, as we are at the end of another week of trading on Friday the 5th of April. We'll have a flick across the calendar. We'll talk about what's going on this week. Really, the main focus of attention is across the United States of America. Now, I'm sure you have probably guessed over the last number of weeks and kind of nearly months at this stage. Chat has been about interest rate cuts to be precise, and how many of them, if any, we are going to get over the course of this year, or really how many we're going to get over the course of this year, in my opinion, if any, but I'll get back to that in a minute. So back end of this week is where the majority of the action took. I say back end, really the whole week actually, when you think about it. Certainly most important data print of this week was NFP, just about nearly an hour ago at this point, but we'll break that down in a minute. What we had across Monday, right? We had manufacturing PMI manufacturing, or the Kaiksen manufacturing PMI from China on Monday. We also had the other version of manufacturing PMI out of China on over the weekend. Both of them positive and showing signs of strength in the Chinese economy, with the manufacturing sector being obviously the largest component, or one of the largest components in the Chinese economy. Positive for growth. And also then the manufacturing PMI from the US followed through above 50, and a rise, 3 consecutive months now of a rise in the manufacturing sector in the US, right? That caused some movement across markets. You could see, when we opened up on Monday, Monday's trade, certainly across US stocks, you could see downside on Monday, bit of a chop, and then into Tuesday, downside again. So pretty negative start to the week across the board in indexes, right? You got the S&P, the Dow Jones, the Nasdaq, the Russell, and then obviously the European ones follow suit with the DAX, the Euro stocks, and the FTSE. We then had the bounce back in the S&P, the Nasdaq, the Dow Jones not so much, but still a bit of a bounce back, and also then the Russell as well. That was then due to the fact that we got this services PMI that goes against, right? Weaker than expected services PMI, below consensus, right? And markets kind of wanted to run with that fact, we're going to get these rate cuts, when earlier on in the week markets had said we're not going to get these rate cuts, right? That then brings us into Jerome Powell. Then on Wednesday, Jerome Powell, did highlight the fact that the economy was still performing well, and also that they needed to get inflation more under control in order to then cut interest rates. But seemed pretty okay with the fact that the economy was performing well, and they were still going to cut interest rates, right? Then we get Neil Kashkari out yesterday, who kind of disputed that fact. The head of the Minneapolis Fed, Neil Kashkari, did come out and suggest that there is still potential for no interest rate cuts through to the year end, if we don't get inflation under control. Now, that has been my thesis for a while. It's difficult to keep that thesis when markets don't really want to believe it. Jerome Powell seems to go the other way, but my personal opinion is, I spoke about it multiple times. We broke it down earlier in the week with inflation. Inflation rising, inflation rising, you still have a tight labour market. You also then get economic data throughout the US positive over the course of Q1, and couple that with the rising commodity prices, again likely to put continued upwards pressure on inflation. None of this suggests to me that we get these 3 interest rate cuts. We're not going to get one in May. I don't think we'll get one in June. That leaves 4 interest rate cuts, or 4 meetings to have 3 interest rate cuts the rest of the year. I just can't see 3 interest rate cuts happening, and I stick to that bias. Kind of maybe die on a hill a little bit, but that's just genuinely what I think, right? You got to act off what you think of. We then come into non-farm payrolls today, over 100k above consensus. Previous was upgraded from 250 up to 270, right? And that is strong labour market figures. You then look at the unemployment rate, ticked down below previous and also below consensus. You had then earnings were kind of in line with expectations, and the participation rate ticked higher. So you still got a strong labour market. Again, a strong labour market contributes to inflation. Economic data contributes to inflation. Commodity prices contribute to inflation. All these things, I struggle to believe we're getting these 3 interest rate cuts this year, and then that is other things that need to be priced in. So again, then you see the way markets have moved, off the back of Neil Kashkari's comments. Big downside across US stocks in yesterday's session that dragged European stocks lower, and that is my expected reaction at the minute. Does that mean you want to go in and sell stocks? That is a different question, right? Short stocks is never as easy as a trade as long stocks. I'm not saying being long stocks is an easy trade. Being able to navigate your way through that is obviously the difficult bit. So being long stocks over the long run is always a better idea than being short. But certainly at the moment, no interest rate cuts this year would have widespread implications across markets. You see yields, a bit choppy early on the week. Tried to push higher Monday, Tuesday. You see aggressive move higher on Monday, aggressive move higher on Tuesday. Chop sideways a bit, and you have had an aggressive move higher off the back of NFP. That's similar across the 10-year, 2-year, and global bond yields. Gold is still hanging on to these highs up here. Continued upward pressure on commodities continues to be supportive of gold. These moving yields are not really dragging gold the way you'd want to see. The US dollar as well. I mean, the US dollar kind of did strengthen to begin the week. If you ever look back, you can see, Monday, bit of strength, but then just broad-based US dollar weakness. The market just kind of wants to run with this dovish Fed bias. I'm not so sure I agree with it. And that's still I do think you've got an upside in the US dollar left when we do not get those interest rate cuts. I'm sticking to the word when, not if. Markets will wake up to that fact at some point, but again, the question is the Fed willing to just let inflation run hot and decide that they're not willing to throw the economy under the bus and keeping interest rates where they're at? Then they run the risk of inflation continuing further. So certainly an interesting inflation print when we do get it in the coming week. But yeah, that's kind of where we're at the moment. The question is, do we get those interest rate cuts? Again, my opinion is no. Economic data suggests again this week there's no real need for it. Manufacturing still performing well. Jobs market is still tight. Inflation is still high. Commodity prices rising. That's just where we're at in markets at the moment. Kind of geopolitical tensions across a number of different aspects of across the world continue to put upwards pressure on oil prices, and also commodity prices across the board. Come into next week, we got CPI on Wednesday of next week. This is then a big print, right? You got core CPI 0.3 is your consensus. Total rate of inflation, both month over month, both 0.3 is your consensus. Year over year, core CPI 3.7. Year over year, headline is expected to tick up to 3.4. This comes in higher than anticipated. I think it puts paid to any thoughts of an interest rate cut in June. And I think that, for me personally, confirms you don't get those 3 cuts this year. Important inflation print then coming up next week. Do also have the Bank of Canada and the ECB. We will cross that bridge when it comes to it next week. But inflation out of the US next week, super important data release. Personally, I want to hope it goes in line with all these moves and my general opinion of markets. Again, we'll have to cross that bridge when it comes to it next week. But interesting week in financial markets. Comments from Neil Kashkari suggesting we may not get those cuts this year, or may not get any cuts this year. That is interesting comments yesterday. Stock markets reacted to it. Let's see if they react further in the coming week ahead. We'll update when we get round to it next week. But again, as I said, we'll cross that bridge when it comes to it. But that's it from me then for this week. Slightly shortened week, with it being Easter Monday on Monday. Back to normal 5-day weeks next week. Hopefully we get a bit of excitement from inflation next week.